about $3 million total for the build and the buying of the land, right?
Correct. Yep.
And then maybe about a $5.5 to $6 million sales price.
Correct.
And so talk about the model there. For the attraction of the investor, they would be in, let's say, second position behind the construction loan, but there's so much margin between, say, 5.5, 6 versus the $3 million total cost. Any thoughts or more context on that?
Yeah, no, absolutely. So we shifted into those markets a couple of years ago. Again, Lake Tahoe, South Lake Tahoe, North Lake Tahoe, the Bay Area, all for the reasons you talk about. The margins are so much higher. When we build here in the greater Sacramento area, and we've got some great communities here. We've got Granite Bay, Loomis, Lincoln, where we're at right now. I don't know if you know, but the Granite Bay community where I live, and we've built plenty of homes, it was sort of made famous by Eddie Murphy. He built a luxury 12,000.
Welcome to the Build with Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more or all of it away to help MVPs. My name is Brett Swartz, and I'll be your host today. And we're also streaming on Capital Gains Tax Solutions podcast and YouTube channel as well, so check us out there. And I'm excited about our next guest. He's a third-generation contractor developer from the greater Sacramento area. And he has an eye and an expertise and a passion for building amazing custom homes, apartment buildings, and all things construction. I'm excited for two reasons for this interview. Not only to introduce you to who is now a top strategic alliance of ours here at Capital Gains Tax Solutions, but also just a chance for you to see what's possible with compounding your wealth. And that's what we're going to be talking about, how to compound wealth through investing with BT Development. Please welcome to the show with me, Mr. Paul Bianchi. Paul, how are we doing?
Wonderful. Thank you, Brett. Glad to be here.
Yes, grateful to have you here. And for our listeners, get to know you for the first time, give us a little bit about your story and your current focus.
Sure. Well, first I'll say we're sitting in a home that my company built this last year. It's an amazing, beautiful home right here in Lincoln, California. And so I'll start you back from the beginning to how we end up in luxury real estate like this.
Great.
But I grew up through osmosis watching my father and my grandfather do the very same thing. So like you said, I'm a third-generation contractor. I worked for both my grandfather first and then my father's company, and then started my own business in 1997 when I got my first contractor's license. So I've been involved in construction of everything from large subdivisions of hundreds of homes being built to large apartment projects of 300-400 units at a time being built. Started my own company. We specialize in infill subdivisions. We'll go into a neighborhood that might have 5 to 20 acres sitting there surrounded by homes. We'll buy that piece of land, of course, with the help of an investor. We'll get it completely entitled for homes and lots. We'll put in the roads and utilities. We'll build every home on that project and move in every client. The other part of the business is we'll buy just one single-family luxury lot, which there's so many of those around Northern California, all the way from San Francisco to Truckee. And we enjoy buying those, usually with plans already in place. Somebody else is taking the time to get the plans developed, get all the way to permit. And that's where we work the best with investors. We'll have them help buy us that lot. Of course, we'll go right into construction because the plans are pre-approved, the permit is ready. And we're having tremendous success, especially in the high-end markets of California, such as Tahoe and the greater Bay Area, actually. So yeah, that's what we've been doing in the most recent years.
Excellent. I want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. Some people call them superpowers. I think they're God-given gifts. And I'm just curious, maybe, Paul, growing up, what were some of the maybe one or two, strengths or gifts you believe you were given, and how does that help and how you help and bless people today?
Sure. I think one of the things that I was an entrepreneur at young age. I was the kid that would stop by the Circle K on the way to school, buy a whole bag of candy, go to school and double the cost, right? And just sell the candy and make the money. I always saved it on top of my dresser. Everyone in my family would come to me when they needed change. They knew I had that money. So I was an entrepreneur at a young age. But really, I think my superpower is I can adjust with the times. No matter what's going on, I'm really good at watching the current event, what needs to be done, what's going to sell, what's going on with the market. I'm one of the contractors that survived the 2009 economy hit that we all took. And of course, in the United States, that was mostly surrounded by construction and the real estate industry. Mm-hmm. And so I was able to pivot from that point. Prior going into 2009, I had almost 300 employees. We downsized tremendously, I think down to 85 employees. I come out of the other side of that. I like to say I got my master's degree in construction from 2007 to 2009. I really learned a lot in those years. And so that's helped me now in what we do with building luxury custom homes, small infill subdivisions, multifamily units. I think we're able to really look at a project, make sure it's going to sustain whatever might come to us in the economy. We vet those projects out. We start them knowing full well we're going to complete them, sell them, and hopefully make a lot of money and have some fun during the process.
Amazing. I'm hearing anticipation and adaptability. I also think just being in the business for so long, by osmosis, you're absorbing it from your father, your grandfather, and being on the job sites and knowing what it means to work long hours, right, and see a job done to completion in a great way, and then having to go and have the grit to build through and survive the 2008 crash. You come back with a lot of skill set and a lot of knowledge learned through those hard times. Mm-hmm. So with that in mind, let's talk about the biggest secrets when it comes to building compounding wealth within this space with BT development. What would you say is like the number one secret to doing that for your guys' success and for the investors that are maybe looking at BT development for the first time?
So many levels of that question there. I think one of I like to call us the ultimate house flippers, right? There's a lot of talk about house flipping. There's TV shows about it, HGTV or whatever. Buy a distressed property, buy a property that's been neglected and needs some tender loving care, fix it up and sell it for more. I like to think we're the ultimate house flippers because we buy raw dirt, right? There's nothing attractive about that piece of dirt except maybe the view. And then we build a beautiful, amazing home on that piece of land. So in my mind, and I know everybody's heard real estate is the made more millionaires in the history of anything in this world, right? And I certainly don't have time to figure out cryptocurrency, so I'm gonna stick with real estate. But in my mind, we fast forward that whole profitability by buying the dirt, putting the beautiful structure, selling it, and getting all our investors their money back at a high return. I don't know of a better way to do it.
Speaking of fast forward, right? So this is key, right? Because there's certainty of execution, and there's the 30 years in the industry. Mm-hmm. The average. Give us kind of the average time to build. From the time it's permitted and entitled and where you're at, right, to completion, and ways that you have found to be efficient with the fast forward. Because speaking development in California, most people think slow forward, right? It can be an arduous process for these deals to be completed for a number of reasons. But how have you kind of mastered the fast forward, if you will?
Yeah, for the investors, what we mostly do is we find luxury real estate lots that already have a plan and permit in hand. On those builds, we'll generally create a 9 to 10 month schedule to build that home out completely. As long as our buyer doesn't show up too soon in the process, we can usually hit that schedule. A lot of times once we start marketing the home about 70% through construction, a homeowner will show up and they might start making changes. And sometimes that'll slow it up a little bit. But for the most part, these are spec builds. We're going into those. We already have a schedule, a budget, all the fixtures are picked out. And we can build those in 10 months. Now, in some of our smaller infill subdivisions, those homes, they might be anywhere from 25 to 3,500 square feet. We can actually build those in 6 months, sometimes 5 months.
So that's excellent. Now, I think the plan and permit piece gets overlooked because what I've learned over the years, it's not really that developers can't develop fast enough. It's that the entitlement and the plans and the permitting process is just arduous, especially in places like California. And it's, it can be a big challenge. But the good news of what we found with this marketplace that we've had kind of this slowdown is there's opportunities for people who've already done the work for the last few years, either a little bit tired or the interest rates have caught up with them, maybe a little bit of distress. So just talk about kind of where we're at with the marketplace and how you're now being very selective to only choose those, fully permitted, fully entitled, and oftentimes architectural drawings, everything is just laid out for you.
Yeah, absolutely. There's so many different stories why we're able to find those lots. But a piece of property we just bought in Orinda, California. It's considered a Bay Area community, very high end. The people I bought the lot from, they had owned it for 6 years. They went through the complete design process with a very famous architect out of Chicago. Designed their dream home. But again, it was a 6-year process. By the time them and their architect went through all the process with the city, the county, the state, the environmentalist, got all ready to go, permit in hand, they were just exhausted. They were older. They decided to move back east, closer to their kids and their grandkids. And so I have a network of luxury real estate agents out there. And when they hear of a piece of property for sale that has permit and plans, they call me first.
And it's amazing, right? That's not to be underappreciated, because you want to be the go-to. I'm a California real estate broker by trade, started at Marcus and Millichap, actually started in the construction business in the Bay Area with my dad and mom, building houses. And you want to be able to go to those investors, those buyers who will perform, and have the ability to deliver, and pay a fair price. So that's excellent, right? So 6 years of work, and now you get to start on Orinda, and let's say 10 to 12 months build out, and the average cost, I think, on that one we underwrote it will be about $3 million total for the build and the buying of the land, right?
Yep.
And then maybe about a $5.5 to $6 million sales price.
Correct.
And so talk about the model there for the attraction of the investor. They would be in, let's say, second position behind the construction loan, but there's so much margin between, say, 5.5, 6 versus the $3 million total cost. Any thoughts or more context on that?
Yeah, no, absolutely. So we shifted into those markets a couple of years ago. Again, Lake Tahoe, South Lake Tahoe, North Lake Tahoe, the Bay Area, all for the reasons you talk about. The margins are so much higher. When we build here in the greater Sacramento area, and we've got some great communities here. We've got Granite Bay, Loomis, Lincoln, where we're at right now. I don't know if you know, but the Granite Bay community where I live, and we've built plenty of homes, it was sort of made famous by Eddie Murphy. He built a luxury 12,000 square foot home there about 25 years ago. So those zip codes, we can build a house for approximately $300 a square foot, but we can sell them for $600 or $700 a square foot. When I go to the Bay Area, my cost might go up $200 a square foot. Maybe it goes from $300 to $550 a square foot, but we can literally sell those homes for twice or more than what we can sell them for here. I keep telling everyone we're going to sell those homes for $1,200 a square foot in the Bay Area. The realtors there keep saying, Paul, you're going to sell those homes for $1,500 a square foot. That's the difference in the market.
Absolutely. And let's talk about the market itself. Some people are like, well, we're not quite sure where we're at. Interest rates have been, they just, Powell just, 25 basis point cut. And then there's another 2 before the end of the year as we're recording this here in October of 2025. The outlook for the industry itself, and some doom scenarios, right? But do you feel, or what's your sense for the luxury, higher end, tech community? We're in Napa, we're in San Francisco, you're in Brentwood, you're in Truckee, one of the most beautiful places in the world, right? Yeah. Walk through your thoughts on that. Do you ever have any hesitations when the great old macro market, but you've done so many deals, been through so many markets, what's just kind of your feel for that?
So 2 things there. The interest rate, everybody in my industry firmly believes, I want to say knows, but we firmly believe the interest rates are going down, right? That's only, that first tick was just the beginning, right? It's supposed to be 2 more this year. Right. We believe 2026 will be a seller's market, meaning every home we can start in the next 4 to 5 months, we're going to be in a very good position to sell at a very good price in 2026 and 2027. That being said, most of what we build in the luxury market, our buyers are all cash. They don't care what the interest rate is. They buy the home and just want to make sure they can change the color of the countertops or whatever it is they want to do to make that home theirs. So we're very blessed that way, in that our buyers are capable of buying our homes outright, no questions asked.
Excellent. And so speaking of track record and that expertise of having that intimate understanding of where these buyers and such, How has been your track record? Talk a little bit about that. Have you ever lost an investor dollar? Like what, the years in which you've done deals yourself or with investors? Give a little bit just a framework for that track record.
Sure. Yeah. Every property we've ever bought with investors, and we've bought plenty of properties with just our money, right? But we can't buy that many. We can only buy so many projects, build them out, sell them, get our money, and do it again. But since we started working with investors, we've never lost an investor a single dollar. They always get their money back, plus a great return, and that varies depending on the type of project, size of project, the investor's needs. And I don't see that changing at all. First of all, I believe we're never going to have a crisis like 2009 again. But even in 2009, let me say 3 years before 2009, which is really in my world, that's when the downturn started. It was 2006, 2007. Anyhow, we bought 5 custom lots in a luxury golf course community here in the greater Sacramento area. We sold the final one of those custom homes in literally 2009. Still did not lose a single dollar. We paid back the construction loan. The investors got their money back. We all walked away with a couple nickels. Now, it didn't sell for anywhere close to what the first of those 5 sold for.
Right, sure.
So I don't want to say it's always a home run, but we've never gotten into a deal, even in the midst of 2009, where we lost money.
Fantastic. Let's shift a little bit to the team. We had a chance to tour all of BT Development and also PWP with Zane Jacobs here, which we'll be interviewing here on the next podcast. And we toured the site and the team. So give a sense for how you're so successful with some of these amazing project managers and the executive, support assistants and team members. Walk us through a little bit about the back end for BT Development.
Yeah. So yes, the team is important. I'm very blessed. I've assembled a great team over the years. I think it's part of just being in the area for so long, producing good quality homes, and we seem to attract really good, very experienced, high quality people. But let me put that on our subcontractor base, right? So we mostly, like general contractors, we use subcontractors, right? And so we might have 3 or 4 framing companies, 3 or 4 roofing companies, 3 or 4 tile companies. But a lot of those relationships are 30 years old. I'm working with subcontractors now where the kids are running the business. Whereas when I started working with our drywall company, I was working with the father. Now we're working the kids of that business. And some of these subcontractors are very large. So they're doing work for the biggest builders in our area, the Lennars, the national builders that do work here. And they typically wouldn't do work for a custom home builder, right? Because it's not enough work for them. But because of relationships I've had with these folks for literally 30 years, it really helps keep our quality, because these are very big companies, our quality and our cost of construction down. Just having those relationships, decades long.
Fantastic. And also, you're full design center, right? For people who want to customize the house. You have a full-time designer. You have multiple project managers. You have a full-time real estate agent on staff who's always building relationships with other real estate agents or listing the properties or helping to keep a pulse on the market. I mean, it's again, watch the full video here that we're going to release with us touring all of BT Development and PWP Wealth Partners. So, okay, so let's keep going here on maybe just a few other thoughts that I have, and then we'll move into like capital gains tax, challenges that people face when they're exiting, and how we're working together, and then we'll do the lightning round. But the development market. I mean, there's this deal in Truckee as an example. I want to expand people's thoughts on not just single homes, right? Luxury, also multiple units, and then also even like large apartment complexes. So let's touch on the one in Truckee right now, what that looks like, and then let's touch on the large apartment complex opportunity in Roseville. Sure.
Well, the Truckee project, as a matter of fact, it's a bank-owned project that was taken over from another building group. So one of the good things about being a company our size, so we're small enough to be on every job, meet with every homeowner, take it all the way to finish. We're large enough to take on a good-sized project, right? Anywhere from 350 apartment unit complex to this particular project in Truckee. It's 38 units. It's half built, and some of the lots have not been touched yet. We're able to go in and because of our relationship with a company like yours, we're able to flex a little bit of muscle and buy that project outright. And what it means is there's literally millions of dollars on the table on that type of project.
Let's break down real numbers, right? So
Yeah.
38 units. What do you think the average cost if you were to build it all? How long would that take? And then we'll talk about profits.
So we penciled it out very conservatively for the cost to buy the project and then to finish out every unit. So some units are partially complete, might only take 30 grand per unit to finish. Some lots, there's 14 vacant empty lots that, they're gonna take a $400 a foot to build the units on. But anyhow, if I took all construction costs, the purchase price, I think we were coming in right around $51 million to build out that project complete. To sell every one of those units at retail value, we're looking at 66, 67 million. So there's 15 to 17 million profit just in that one project. And it is not a challenging project. I mean, they are literally duplexes.
Well, the beauty is part of them are already half built, right?
Correct.
Fully entitled for repayment for the rest of the stuff, and the designs, everything's in place. And so you're literally, it's a perfect world. You're stepping into a bank foreclosure, and you're just bringing it to completion. The heavy lift has really been done.
Oh, absolutely. Permits in hand for everything.
Yeah, you're just you're in the red zone here. You just got to push it through for a touchdown.
As a matter of fact, 7 of the units are completely leased out, generating $6K a month in income. So it's a income producing asset day one.
Okay, so is the goal to fully obviously complete it and then rent them all out and then turn around and sell it, or what's kind of the play?
I really let my investors choose that. If a big enough investor comes along and says, "Hey, well, I'd like to keep that project as rentals," no problem, we'll build it out.
Okay.
But right now, I pencil everything to build and sell. Right, that's how I can get my investors their money back.
Okay, so now let's walk through the capital gains tax challenge with this, right? And then we'll cover Roseville here in a second. And this applies to any asset that anyone's selling, whether it's a business, Bitcoin, real estate. If you have a gain in tax California, you're going to pay somewhere between 33 and 37% of that in capital gains tax. So for every $1 million, let's just call it $370,000 of tax. And so this is kind of where our relationship comes in, and where we can offer our investors and our clients and our network upsized returns and opportunities with groups that have a proven track record, and doing it in a way where it's consistent, it's durable, right? And so, let's just take this example. Let's imagine you had bought it yourself, or had one single investor buy it themselves at 50 million, and let's just say they sell it for $67 million, right? That's about a $17 million gain, right? Minus some closing costs and whatnot.
Sure.
It's in Truckee, so it's still on this side of California, not Nevada side.
Absolutely.
So 37% is about $6.3 million of tax, right? And so that's massive, right? That's a massive amount of tax. So what's the biggest challenge that you've seen over your years? And I'm curious, you're getting to know us and understand our strategy, but you've been doing this a long time, probably paid a lot of tax, right? What as a developer, what's been your biggest challenge with capital gains tax and or the 1031 not being a great fit for you?
Yeah, so mostly it's for our clients, whether they're buying a property for us or they are one of our investors. It's their tax challenge, and I know they have quite a bit, right? When we finish a project, prior to meeting you, we're ready to wire them their money, and suddenly, well, hold on, Paul, don't wire it to us yet, because we're going to have to pay a lot of taxes. Well, what do you want me to do with it? It's your money. And so then we try and get strategic with them and try and buy another project and roll it over. But as you know, 1031 is very encumbersome. They have a lot of loops they got to jump through. And I keep telling them, I'm not a CPA, I'm not a tax specialist, and they got to deal with a 1031 exchange person, which, working with you seem to have cracked that code for them.
Yeah, exactly right. I mean, that's the problem we faced before the '08 crash, is people knew in '06 and '07, this is probably the height of it, but they felt trapped between a bad 1031 overpaying and massive capital gains tax. So either they did nothing and just held, or they sold into the 1031 and lost half or all of their wealth because the debt was too much and the liquidity was light. And when you don't have cash flow, you kind of can sink the ship.
Sure.
And so we talk about having a tax flow and a cash flow mindset, but in particular, capital gains tax flow on the exit, so that you can compound the wealth. And so the big picture is, if and when you sell, you can defer this $6.29 million. You can defer that capital gains tax, and you can move it to new investment opportunities, whether it be passive real estate deals, passive debt funds, stock market investments, whether it be active real estate deals, a blend of all three. And in fact, that's what most people will do. They'll do a mix of these things. And then they can dollar cost average or strategically invest when the market makes sense, right? Versus selling high and buying higher, typically in the same market with a 1031 exchange. Or even from a developer standpoint, your basis is 50 million, you're selling it at 67 million. You're probably not finding great deals at 67 million, but you might find 3 to 5 deals at 5 to 10 million each that you could if you had time to find and pick off and then move them up. And that's the beauty of our strategy. It's combining this deferral mechanism with the trust and timing to be able to invest and compound. And so if people want to learn more about that, you go to capitalgainstaxsolutions.com. We can help you with your 1031 exchanges and a backup and an alternative to this. And you don't have to ever use a 1031 ever again, but we can also help you have a bifractured 1031 in case you're looking for both. Any capital gains tax on business, real estate, Bitcoin, go to capitalgainstaxsolutions.com to learn more about that. Paul, that being said, are you ready for the lightning round?
Sure, let's try it.
All right. If you go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
Oh boy, I was not expecting this. Well, if I know everything I know now, I would say plan for 2009 a little bit better.
Absolutely. Question number 2: What would you say your favorite book that you may recommend it the most in the past few years?
I just reread it again for the 4th or 5th time. Oh boy, How to Think and Grow Rich. There are so many nuggets in there. And I forget about it when I go a year or two without reading it, and I read it again. This literally is all you need is this book.
So good, right? Great book. Yep. Next question. What are you most curious about right now?
Boy. I'm curious about, what really is going to go on in the next 4 to 8 years. I hope politics will continue to play less of a role than it seems to be playing right now. I hope that the economy gets stabilized. Real estate does well, but it's an unknown for me, just like anyone else. I have a lot of hope, though. Yeah. I think we're in a really good place.
Yeah, excellent. Next question. Number 1 leadership quote or theme that you strive to live by.
It's very basic. Quitters never win, and winners never quit. If you break that down and think about it, there is no other way. I love that quote.
I love that quote too. That's great. And the last question we'll ask, and then we'll wrap it up. How do you best define stewardship, and then how do you try to practice that every day?
I think about that in terms of my company. Whether it's investors that I've made money from or from selling a property and making money, I feel it is my obligation to manage that money, manage my team, make sure we don't overspend. I want as much of the money reinvested back into my company, whether that's better people, better training for my company, better software. I feel that I am steward of that company to make sure that the younger generation, and I have some very good young employees right now, that they are set for generations to come.
Paul, it's been more than a pleasure having you on the show. I want to just thank you for spending the time, sharing your expertise, sharing the inspiration. I want to encourage you to keep using the gifts of being anticipating and adapting with the times, right? And seeing trends and seeing real estate opportunities and helping people to compound their wealth to make a bigger impact in this world. Keep using your entrepreneur spirit that you had as a youngster, and keep making a huge difference in people's lives. For our listeners who want to, or viewers that want to get in touch with you, Paul, could you remind us one last time, what's the best place for them to find you?
Literally, you can go to our website, bianchigroupdevelopers.com. It'll bring you right to our contact page, as well as you can just call me. My cell number, 916-869-1471. I'm always available.
Awesome. Thank you, Paul. I also want to thank all of our listeners, our viewers, for watching and viewing another episode of the Build It to Billions podcast, also streaming on Capital Gains Tax Solutions podcast and YouTube channels. Just like you, we're on this journey to scale from millions to billions so we can give more all of it away to help MVPs, the most vulnerable people in this world. I want to encourage you to take this episode, share it with somebody, but be inspired to build and to continue to compound your wealth and impact. And of course, if you have a large exit of Bitcoin, business, or real estate with massive capital gains tax challenges, we are here to help here at Capital Gains Tax Solutions. Go to capitalgainstaxsolutions.com. I'm Brett Swartz, and I appreciate you watching or listening, and we'll talk to you again real soon. Bye now.